This is Dr. Tip, and Dr. Tip is one of the most successful traders. If you look at his posts, you might think that across all of Twitter, at regular intervals, he posts his trading results for the entire month, where we can clearly see he is a profitable trader, he is a good trader, he is profitable. So I was all the more pleased when he published his explicit trading strategy for us. He shared with us what he does every day, one of the simplest trading strategies. All we need is the VWAP and 2 EMAs. That's how easy it's supposed to be. So I went straight ahead. I went to TradingView, pulled up the Bitcoin chart, and also added the New York session indicator there, because we always trade this at the start of the New York stock market opening. That's what we do with this strategy. At the beginning of every New York session, we enter the trade either long or short. I then went back over the past few weeks, checked each day, step by step, always looking at how things looked during the New York session, whether this trading strategy worked, and whether we would have had a positive outcome or not. These indicators already partially predetermine the direction for us, and that's why I went back to the Twitter pause again and took a look at how things are. The problem is how to set your stop loss properly and how to set your take profit. I backtested this again for a few days and came to the conclusion that overall we have a win probability of 40% and accordingly a probability of 60% for the other outcome. That the trade doesn't work out, that's the problem with the whole thing. I don't really understand what he means by his stop loss and his take profit here. If he means it the way he described it here, then he'd have a 1-to-1 risk-reward ratio. And to be honest, in my opinion, this strategy doesn't make any sense. Either everyone is misunderstanding it, or this strategy just doesn't make sense. At the moment, I'm leaning more toward it not being a sensible strategy. After that, I browsed around his profile a bit more, saw this link here, and clicked on it. And then it became clear to me he really has 10 things linked here. This is probably not a profitable trader, not to accuse anyone of anything. Maybe he is profitable, but the trading strategy he showed really wasn't that great. And personally, I always start to keep my distance at some point when I see, hey, they've got 500 links in there from 500 different sites. They're promoting all that, and that's when I personally keep my distance, because then I know what their intention is in doing all this. For example, we personally offer a free trading course. That's already a whole different level than if I had 10 referral links in my description. But everyone should make up their own mind at this point, friends. We're not cheap YouTubers trying to sell you some dumb courses for €1,000 or whatever. We create honest crypto content, and that's exactly what we do. Everything is 100% free, but that's a whole different topic. I'd just be happy if you appreciate all this by leaving a like or a comment. And of course, the video shouldn't end here. Makes sense, because I just wanted to show you what this process is like. I see a new trading strategy, test it out, sometimes invest hours into backtesting it and so on, and then it doesn't work out. And normally I just wouldn't show you anything anymore at that point. The problem is, at some point people start thinking, yo, every trading strategy works out perfectly. That can't be right. That's just the thing, which is why I included it this time. This strategy didn't work out. I didn't know that from the start. I just started the video, tested it with you, and it didn't work. No big deal, because I actually found something else from the wonderful Mr. Nebraskangooner, a successful trader, it seems. Definitely over 400 followers on Twitter. One of the biggest crypto influencers we have in the market, and he does it himself. He also creates interesting content, especially very specialized in trading topics. He has also revealed part of his strategy here and said the following: "This is a simple trading strategy on the hourly chart, so I thought, why not give it a try? Let's dive in, at least test it out, and stick around until the end. You're going to like the results. I'll explain to you now how it works, what we're going to do, and then we'll get started right away. We're going to use the Bitcoin chart, but you could also use Solana. He always likes to have some fun with it too. Anyway, it's smart to trade several assets at the same time here, so that you can get your trades in per day, then switch to the hourly chart. And here, select the EMA. I've just selected this one for now, and I've deselected all except for the 200 EMA. I've set it to this color. We need that one. Once we have that, we also add the Guna EMA. That's this one here. Guna EMA, there it is already. Just click on it once. And here, I would just make the colors a bit more visible. And this one here, we can deselect. Let's do that too, we don't need it. It's super simple. We have 3 lines here. The 200 EMA is the turquoise one, and it shows us the overall direction, whether we're generally bullish or bearish. That's already important, so we have the trend. Then with the Guna EMA, we also have the 11 EMA in green and the 22 EMA in red. And personally, we only take a long position, a Only if we are above all three lines here, only then would we open a long position. And ideally, we would do it like this. We select a long position here. If we break above, retest the green zone here, go long here, and set a relatively tight stop loss. We can basically vary the stop loss below the red EMA and the take profit. I personally like to do it this way, so that we set the take profit when we retest the red EMA next time, because this way we can basically capture almost the entire momentum of the trend. That's how we enter a long position. So we're above here, and above here. When that's the case, we wait until the price tests the green EMA again. If it does, we enter the trade. And our stop loss is set below the red EMA. And at the next crossover with the red EMA, we take our profit. That's how simple it is for a long setup. For a short setup, it's obviously the other way around. We're below all three lines. If we do this here, we're below, and we test the green EMA again. We would open a short position right here. Stop loss again here at the red EMA, so the 22 EMA. And I would set the take profit when we test the red EMA again. And accordingly, if we do this here, we would have a 3.8 risk-reward ratio in this setup. And that's the thing. Here we're focusing on highly profitable setups. So basically we can lose little, but win a lot. Because the risk-reward ratio is extremely important in trading. And I wanted to briefly touch on this topic again in this video. If we select a long position here, just click on it, we can lose 100% or gain 100%. So for example, we put in $100. We can lose $100, but we can also win $100. If we now set a 1 to 2 risk-reward ratio, we can lose $100, but win $200. And now, not every second trade has to be successful anymore. It's enough if only every 2.5 trades is successful. That means we need a lower win probability because each setup is more profitable. In other words, you can see that here again as well. With a risk-reward ratio of 1 to 1, you break even if every second trade is successful. With a 1 to 2 risk-reward ratio, as I just showed you, we only need a win probability of 40% or more to be profitable. With a 1 to 3 ratio, we only need a 30% win probability to be profitable. And this is extremely important to understand. In this case, we simply have a really nice risk-reward ratio. Accordingly, not every trade has to work out, but when the trades do work out, they really pay off. And personally, for my part, I've noticed with this strategy that it becomes even more interesting and even more profitable if we also develop a small gap here. When we have that, trades usually work out better because personally, I just wouldn't trade something like this in this area. There's just too much stagnation. Here, the price itself doesn't really know what it wants to do. But when the gaps between the lines keep getting bigger, that's exactly when it gets interesting for the setups. That's what I've personally noticed. That's how I would use the whole thing. And then I would say, can we backtest the whole thing a bit more? And then we'll get right to the results. I keep a chat blue face hello when they gotta hate on me. I'm on my grind on Tony money. I feel like Bruno, but call me Uno, cause I got one of them with me, and I'm a beast, pity. This is gonna bang, shitty, gotta put her on for my city. And now we come to the results. I entered the whole thing into ChatGPT because I have now back tested it. We checked it with 100 trades and we had a win probability of 31%, which sounds low. But because of the risk reward, as I just showed you, it's actually not that bad. On average, we have a 1 to 3.5 risk reward ratio. That's the thing. Take a look at this ratio between what we could lose and what we've won here. And because we have such good setups so often, on average, we just have a good risk reward ratio. And not every trade has to work out. Sometimes it's enough if only 31% of the trades work out. And if we were to trade the whole thing with $1,000, we will use 2% of our account per trade. With this probability of winning, with this average risk-reward ratio, then we would definitely be profitable, and then we would have $2,200 after 100 trades. That means we have a profitability of almost 120% with this strategy, because we would have more than doubled our capital after 100 trades. Of course, it must also be said that this is a long time coming with the 100 trades. We've already gone back several months in our baking tests, which is also okay, because in practice you would trade the whole thing simultaneously with Bitcoin, Ethereum, Solana, and Avalanche, or rather simply have all charts open. And where it makes the most sense, that's where one would enter into such a trade. All in all, I'm much more satisfied with this strategy, and I have to honestly say, it's a cool strategy where you simply use the EMA, but 3 different ones, and I find that quite relaxed. But it also makes complete sense. If you understand the EMA, and if you understand the gaps between them, it all makes perfect sense. This is also a cool strategy. And I think at this point we can slowly wrap up the video. You know what to do, friends. For this honest content, drop a like every now and then. Leave a like, leave a comment. And then I'd say feel free to write in the comments what else you'd like to see. What strategies do you have in mind that we absolutely need to discuss? Once you've done that, I'd say see you next time, friends. Ciao.